Hello and welcome to my weekly review of the stock market. The week gone by was a very tumultuous week with the large cap index and the mid cap index both down around 2%, but the mid cap and micro cap, the small cap and the micro cap, falling much greater at around 4%. So clearly a strong risk-off sentiment, especially from the retail stock individual investors. DIs outperformed the FIIs this week. They absorbed all that they could sell, but then since their money is spread across the thing, they could not prevent a fall. What caused this week to be so bad was the fact that in addition to the geopolitical situation not showing any improvement, though Mr. Trump's China visit did raise some optimism that something could come out of it, nothing came of it. Oil continues to remain at $100. The US interest rates, because of the inflation data coming out, went all the way up to 4.6%, leading to a dollar strengthening back again to 99.82 and a spillover effect on the Indian bond yields with the G-Secs at about 7.1% 10-year and the rupee breaching the 96 mark. During the week, it came back just below 96 at the end of the week. So overall, not a very supportive macro environment, but that was not the main cause of the problem. What caused the problems was the domestic front. It started off with Mr. Modi's speech to the nation requesting people to reduce their fuel consumption, to work from home, reduce jewelry purchases, reduce foreign travel, and kind of reading the fears of a similar like COVID-like reaction again coming back. That was followed with a gold price import duty hike and then by a retail petrol diesel hike by 3 rupees. Though the rupees was small, the fact is that people did not read these signals very well, saying with such a small cut and the kind of numbers the government put out about 30,000 crores per month or the OMCs are losing, market is expecting further petrol price hikes and hence individual investors did not take it kindly. That's why in addition to the small cap and the micro cap falling very sharply, what led the fall was realty with 8% and with consumer durables and auto and PSU banks, all the rate sensitive companies getting hit. IT, of course, also was a very bad performer because the AI threat continues to remain an overhang. And despite the rupee weakening, the benefit of a depreciating rupee came to the other exported sector, which is pharma and to some extent metals. IT recovered on the last day because I think year to date it has lost about 27%. So on the Friday alone, there was a bit of buying and IT was the best performing sector because probably now next week you can see IT kind of form a bottom because if the rupee continues to weaken, it's again with a value play coming back into a kind of a hedge against rupee depreciation perhaps. But that apart, the week forward, we continue to have to keep a watch on the macro environment outside India as well as what the government may do further steps. Thank you.